Hello, everyone. Thank you so much for joining us for this conversation. It's really exciting to be here with you guys on the beach, and so exciting to be here with you, Dan.
Great to be here.
Great
Thanks
outfit.
everyone for coming.
Great outfit as always. And I also want to encourage you guys to participate in the conversation. You can actually scan that QR code over there on the purple bar, and you can submit questions that I'll aim to ask at the end of this. Obviously, Dan is at the forefront of conversations around AI investing, so I cannot imagine a better person to have this discussion with, especially at such a timely moment. And actually, I was going to save NVIDIA for later in the conversation, but Jensen Huang is speaking right now, and I feel like the whole world is watching and listening. So I want to start with NVIDIA. Obviously, the bar just keeps getting higher and higher for this company. What do you want Jensen to say right now to investors, given how difficult it has been for the stock recently?
I mean, I think what he's talking about, and I think you'll see it over the next few days, is showing how the AI build out in terms of Blackwell, in terms of physical AI, in terms of what we're only in the first inning of where this is all heading. And I think it's important because in a time like this, macro, tariffs, stocks have sold off. What you see there, and it's what I saw in Asia a few weeks ago, demand to supply 15-1 for Blackwell. And it speaks to CapEx is going to continue to get accelerated. And I think as investors see what he talks about, and I think as you see more and more of the enterprise demand, you start to realize we're actually in the beginning of this AI revolution, not in the kind of middle to late stages.
So is now the time to up your exposure to NVIDIA?
I mean, look, we believe in 25 years covering tech, there have been a few times I could count probably on two hands where stocks have sold off for different reasons, not fundamentally, whether it was macro, Greek debt crisis, geopolitical, interest rates, and they were, I view, generational opportunities. My view is like where NVIDIA, I believe NVIDIA, we're talking about a $4 trillion and ultimately a $5 trillion market cap over the next few years, because you have $2 trillion of AI CapEx over the next 3 years. And there's only one chip fueling that, it's NVIDIA. So that, I believe this is a stock that's going to have a 2 in front of it over the next 6-9 months.
It's been a tough start to the year, not only for NVIDIA, but for the Magnificent Seven companies. I think the NASDAQ 100 has gone 18 trading sessions since its record high, and we haven't really seen people pile back in. How much more pain is there to go for the big tech companies, and is this a 2022-like moment?
Yeah, and I'd say if I had to compare from like a nervousness perspective, if I go back to, let's say, like financial crisis, COVID, March 2020, those type moments, let's say on a scale 1-10, 10 would be like institutionally how nervous people are. I'd say right now it's about an 8.5, but yet fundamentally everything we see, it's actually the opposite. And like we see a pretty healthy enterprise spending environment. We don't believe recession. I think consumer actually spending is accelerating relative to digital advertising and other areas. And I just think, you know, our career has really been defined by helping investors see forest through the trees in times that it was a white knuckle. And right now, when it comes to tariffs and geopolitical and everything we're seeing, I'm not saying that that doesn't cause near-term pain like we've seen this year. But I ultimately believe tech stocks will make new highs in 2025, in the second half of the year. So I don't believe this is like the beginning cracks, self-fulfilling prophecy, except, and I view it much more as an opportunity rather than the time to panic and think this is to lighten up tech exposure. That continues to be our view.
What is the next catalyst then for tech stocks? Do we have to wait for a little bit more clarity around tariffs? What are investors waiting for to get comfortable to get back into
Look, I think the tariffs, the reason it's had such a dramatic impact on tech is because less about Mexico and Canada. It's really much more around China tariff, because the worry is like export controls, chips, supply chain, what does that ultimately mean for NVIDIA, for chips, for what ultimately that would do even for the software players. And that's why it continues to sort of be this game of high stakes poker. And I think you have to play it out. I think as the tariff narrative becomes more clear, especially as we get into what we believe by the summer, where you start to have, I think, a lot more clarity on the China tariffs. I think that's a catalyst. But I think the real catalyst, I think it starts today and starts this week. I think it's about NVIDIA GTC. It's about understanding black oil demand. We talked about in Asia, 15-1 was ultimately demand to supply. I think it's ultimately as earnings comes through in April and the big tech players more and more show they're not in any way taking their foot off CapEx. I think as that narrative starts to play out, you start to realize this was much more of a golden buying opportunity for the long term rather than the time where it's like there's cracks and then you look back and be like, okay, that was actually a sign. As someone that's covered tech from the 90s to today, we've never had more demand from a spending perspective in our history. I mean, that's why I continue to say we are living through an AI revolution. We are living through a fourth industrial revolution. And a lot of times, I mean, I'll just give just one example. 2007, at Apple launch, iPhone, this is the generational moment. Apple is only AT&T that ultimately launched that phone. A year later, financial crisis hits. Everyone's like, that's it. It's over. Everyone's going to keep their BlackBerries, Palms, Nokia. Apple had 20 million customers at the time in terms of iPhone. Today they have 1.5 billion. And the stock was a 20-bagger from that moment. The point is, it's very easy at that time. And I think that's really been how our career has been defined. That's why we travel so much to understand what the demand drivers look like.
Yeah, speaking of your travels, I feel like every time I go on Twitter, Dan is, in a different part of the world. What are your conversations like with global investors? Do they see the US still as the dominant player in the AI space?
Well, I think also that gives you a much more global perspective. I think if you sit there in an echo chamber in New York wearing your Peter Millar vest, taking Metro North, just talk, you get, it's not exactly a global perspective. I feel like by especially seeing more and more what we see in Middle East, especially in Asia, look, the biggest nervousness is investors fearing that whether it's tariffs, geopolitical, what's the rules of the game, and as well as when you think about China tech exposure, that you're starting to see more play, whether it's K-Web, Alibaba, some others. But the reality is everyone's basically waiting for, when's the pullback end? Where do you own the names? They're not more and more. You're seeing more and more investment in U.S. tech assets rather than the opposite. So I view it as much more of a pause, digestion, understanding rules of the game, rather than thinking this is the time to leave. But it shows with DeepSeek. DeepSeek, again, better chance of me playing the NBA than DeepSeek spending $6 million not using next-gen NVIDIA hardware. At that time, you're like, that's it. Someone in their basement with $6 million is taking down the U.S. tech infrastructure. Okay, now as more has come out about it, it's 30 to 40,000 next-gen NVIDIA hardware that they had, and you add 2 commas to the 6 million. So you have to go through these periods, but those are the opportunities rather than, as we always say, haters hate. They've hated NASDAQ from 2,000 to 20,000. So when stocks hit, clowns, all the caricatures, they all come out over the weekend. I get it, but the bears sound smart. The bulls make money in markets like this.
I love that line. And speaking of DeepSeek, do you think that there could be other AI models that emerge and kind of, threaten all the spending by these big hyperscalers? Is that a worry, and how do investors navigate that?
So it's not a worry because DeepSeek is bullish for NVIDIA. So it's just the cheaper the models get, the more models they are, whether it's China, US, Australia, that's just going to be more of an accelerant for chips, for infrastructure, for the hyperscalers. But to have a view that there's going to be a company that in any way is going to marginalize what NVIDIA has done, I'd say it's basically impossible. Now, there will be others down the road in AMD. You could look like Broadcom in terms of ways to play it, and ultimately down the road in terms of who others could benefit. Eventually, big tech will make their own chips. Amazon's talked about and others. But there's one game in town fueling a fourth industrial revolution. And that's why when I look at NVIDIA at whatever, 22 times earnings, these are the opportunities rather than the time where stock's telling you something, we didn't see it, this is going to end well, age well, let's look at this in 6 months, the usual X stuff. The reality is what I see is a demand to supply that's basically we've never seen in our, basically in modern history for tech.
It's about 2 years now, I think, since ChatGPT came out, and we're still waiting on Apple's AI features. We haven't really seen Salesforce's AI agents move the needle on revenue. Do you think that investor expectations might be a little bit too high and that development might not necessarily be keeping up at the moment?
See, it's a great question. I actually think the AI is all about the enterprise for the next 18 months. Consumer AI story, you're going to have hundreds of applications that are built, whether it's on top of Apple Intelligence, other development platforms, autonomous robotics. That's the future, and Jensen's talking about that in terms of physical AI. But enterprise AI is where the demand is, and that's why, from an investment perspective, we talk about chips. It's the hyperscalers that are going to own that, from Alphabet to Microsoft to Amazon. And I continue to view, when you look at names like Palantir, and you look at some use case names, Salesforce.com, and then you look at names like in cybersecurity, CrowdStrike, Zscaler, or Palo Alto, and others. Those are the second, third, fourth derivatives to play this. And I think that continues to be the best way to play this theme. First, second, third, fourth derivatives.
We always talk about the winners of the AI revolution, but which companies, which sectors are some of the losers? There was UiPath reported earnings last week, and I think a lot of analysts flagged that they were worried that AI was going to overtake their market. What are some of the companies that are at risk of that?
I think that's a good example, like with UiPath. I think companies that are, there's going to be a lot of companies that get exposed on the negative side. I think UiPath being an example. I think IT services, I think it's actually a pretty big headwind. Like when I think about overall, I guess, the sector perspective, I think a lot of the IT services companies are actually going to be exposed in a negative way. I think software is the winner. Like when you look at names like even like an IBM, you look at names like Oracle, Salesforce, I think the key thing to focus on is really it's the install-based names that are going to benefit in this market. And I think that's something where it says, like, what's the market mispricing? I believe what the market's mispricing is underestimating what the true demand is going to look like here. Even when you actually trajectory it out to physical AI, autonomous, robotics, and where ultimately everything goes. But even in the near term, it's the second, third, fourth derivatives as that plays out, despite near-term regulatory, what's rules of the game, tariffs. Because I'm telling you right now, 2 years from now, we'll come here and you'll be like, whatever happened with tariff? Like if you don't think Canada and Mexico that thing gets resolved in the next few months, that's our view. China, Trump probably is with Xi Jinping. They're probably going to have a summit sometime in the summer. So you have to be able to look through the near-term fear and see on the other side. And I think that's actually been like the best way to play tech over the last few decades.
The Magnificent Seven companies for a while now have been kind of moving in tandem up until recently. Now we're seeing Tesla, for example, falling off, some of the other names not doing as well. How do you discern the winners and losers in that group specifically? Which are your favorite ones? Which are doing it right?
Yeah. And I think each one has its own narrative. Like if you look Alphabet down, and today they did this Wiz acquisition. I think fear is about antitrust, consumer spend. Does AI almost disintermediate Alphabet? I think that's an example. That's like probably one of the most mispriced large cap along with Microsoft, relative to, I think, investors underestimating what the demand curve is really going to look like over the next 2-3 years. I think those are also companies where CapEx is ahead of revenues. So in other words, a lot of these companies, you saw $325 billion of big tech CapEx this year, $100 billion year over year. You're like, why are you spending so much? You're not seeing it. You're not seeing it. Again, it is an arms race playing out. You're building out. It's a fourth industrial revolution. You're building out a new city, a Vegas, a Dubai, however you want to think about it, from a tech perspective. And I think when you look at names like Apple, as we've talked about a lot, the consumer AI revolution is going to go through Apple. 25% of the world is going to access an AI device through an actual Apple device. And I think those are examples of names where the narrative in the near term feels bad. It feels uncomfortable. It's, and obviously a lot of the bears are sort of own the narrative in the near term. But if you're able to kind of look through, I could look at many, many times on these names, Tesla being another example, where we've probably been back against the wall on Tesla 7 to 8 times in the last 10 years. Now, there were periods where it was like, financially, could they get through and build it? Twitter's situation, must sell in stock. Obviously, this being one where we are today. Margins, I mean, there have been many times, but my view, let's say, on a Tesla is it's the best disruptive technology play, in my opinion, along with NVIDIA, over the next decade. So I don't sit there on a Tesla being like near-term brand issues, where that's it, this is it, clock struck midnight. Instead, it's understanding the autonomous future, where I believe from a cybercab perspective and robotics, that's going to be more value than the company itself. And I think that's always how I've called stocks. I'm just not one to look at things very, very near term and be scared, because I think those are the best opportunities that you've missed especially over the last decade.
Where do you see opportunities now outside of the hyperscalers? Obviously, AI is supposed to be this productivity miracle. Where are these secondary, tertiary plays right now?
I think the strongest subsector, and we've talked about coming to this year in tech, is going to be cybersecurity. I mean, cybersecurity is going to be a massive second, third derivative beneficiary. You have less than 50% of workloads that are in the cloud today. You look at even names like a barbell approach, like a name like Checkpoint, cheap stock. Stocks had a phenomenal year. Alphabet buys Wiz today, one of the best sort of private startups out there in terms of cybersecurity for $32 billion. CrowdStrike, Zscaler, CyberArk. I think there's going to be a lot more M&A, and I think you're going to see accelerated demand there as that plays out. And I'd say almost to some extent it's viewed as a defensive way to play tech in terms of what we see there.
So is big tech itself no longer the defensive play that it was over the last couple of years?
I think you're going through a risk off, and big tech is seeing the disproportionate amount of selling. But anyone that thinks that big tech is not going to continue to lead this market, I think that's the wrong move, because to me, stronger are going to get stronger. And when it comes to we are living in a fourth industrial revolution that's being led by big tech. And in that move, there's periods of time you go through, it doesn't feel good. It's uncomfortable. The bears come out. All the haters come out. That's the nature of it, right? But that creates the opportunities if you're able to kind of see through it. And when I see demand to supply 15-1 for Blackwell, and basically sold out for 2025, and you only have 4% of U.S. enterprises that have gone down the AI path, and none in Europe, and none in Asia outside China. We are at the beginning. It's year 3 of an 8 to 10 year build out. And I just always continue to say, I'd rather own in the left lane a Bugatti going 95 miles an hour, pay up for it. Every once in a while, a cop comes and you get a ticket. Then be in the right lane in a minivan value, owning like sit there with a company that's essentially like some of these value names that I believe don't capture where the true technology is.
So I do see some questions here from the audience members, and thank you guys so much for participating. There is another Tesla question. What are your thoughts on Tesla? Is this a short-term sell-off with long-term opportunities in AI? And I know you spoke briefly about this.
I think we're going to look back. If this was videoed and we look out 3-5 years, I think we look at this as probably a top 3 opportunity in Tesla in the last 10 years. That's to characterize it. Because if you believe like we do in the autonomous future, and Tesla will have 10 million vehicles by next year, and the install base, and ultimately the pure revenue opportunity that I believe Tesla ultimately is going to OEM autonomous to basically every other car manufacturer in the US. This is one of those moments where it's like, could the stock go down more? Of course it could. But do I believe there's a $2 to $3 trillion market cap in the next 2, 3, 4? Yes. And that's my view on Tesla. I just think we are going through, we call it a moment of truth, but as I believe over the next, call it few months, Musk starts to balance more with Doge and with Tesla, pull back on some of the initiatives. Some of the brand issues start, I believe, more and more contained. And then you're talking about what was the best-selling car in all of the world last year in terms of Model Y. But I get it. Every 5 minutes I get an email or some text or some letter, which hopefully doesn't have some bad on it, from like someone like, I'm selling my Tesla, Musk. I get where we are today, but we've been there with Musk and Tesla from the beginning, and this is just going to be one of those moments in a broader growth story as it plays out.
What would you say to Elon Musk right now?
I mean, and we've talked about it, and I've communicated to Tesla themselves, like, Musk needs to balance being CEO of Tesla with Doge and the government responsibilities, because the last thing you want is for Tesla to become a political symbol. Political symbol for a broader brand is the worst that could ever happen. And I think right now this thing has overstepped relative to, as a Tesla shareholder, I continue to believe Trump is ultimately going to accelerate the autonomous future, and that's going to be, I believe that is probably going to be the biggest sort of golden value for Tesla, but in the near term, needs to be a balance for Musk. And I think that until that happens, you could continue to see this volatility, and that's really what investors are commanding.
We're very sadly cutting it close on time. There's one more question here. One audience member wants to know your thoughts on the evolution of AI applications and what companies are going to play a role in that development.
I think Salesforce is going to be one of the biggest AI plays when it comes to software. I think Oracle is a huge player. Obviously, Palantir, to me, when I think about the name that ultimately is going to dominate I think Palantir is going to be $1 trillion market cap in the next few years. And I think software more and more is going to be a way to play AI, because as the monetization, the use cases play out, software is going to be the one that benefits. And you've started to see with the consumption models, Snowflake, Elastic. That's the beginning of as it all starts to play out in terms of software. And I think we're going to be sitting there over the coming years, and that's where more and more the second, third, fourth derivatives of AI are actually playing out in terms of numbers. And I think as that happens, by that point, you've already missed it. In other words, like once you get the NVIDIA inflection points in numbers and stocks, at that point you've missed it. That's why we spend our whole career and we spend all of our days trying to understand what the true demand trends are. And that's why, look, and that's why you don't see it in your office building. You don't see it in your spreadsheet. And that's why the haters hate. The bears will always be negative when it comes to tech, but they've missed every generational tech stock the last 20 years doing it.
And just super quickly, what is your message to some of the advisors here on conversations they should have with clients through this market volatility?
I think it's all based on risk. If you have clients calling you every 20 minutes, being like, "Is this over? This tariff?" More and more, we see it even like in terms of clients here, the nervousness. Okay, if they're too nervous to hold it, I understand. But longer term, selling tech here, I think would be one of the biggest investing mistakes you could probably make relative to where more and more growth is. And I think we are just in the beginning of this all playing out, and you got to navigate the political sort of landscape and the noise to see through the opportunities.
Looks like we're all out of time.
Thanks,
Thank you
everyone.
so much,
Thanks,
Dan.
everyone.
Thank you, everyone. What a great conversation.